Also back with us, Michael Yoshikami. He's the founder, president, and chief investment strategist at YCMNet Advisors. He was named by Barron's as one of the top 100 independent financial advisors for 2009. So, Michael, we're going to kick it off with you. Stephen Lehman was just saying the market really not all that healthy. Agree, disagree?
Well, I'm not as bearish as saying it's a secular bear market, but I do think the market is not as strong as people think. I think earnings are justifying market values where they're at, roughly speaking, give or take 5–7%. But I think the drive higher is going to require for us to see if the economy can take off after stimulus. If you look at the house sales numbers, home sales numbers that came out, it was very much because of the tax credit.
It's a big question that's out there, correct?
That's the really issue. So we really aren't going to know that, Carol, really for 3 or 4 months until this all wears out. I mean, it's really the patient's been jump-started, but can it live on its own? We don't know that yet.
What is your take on earnings and where you think PE should be?
I think earnings have been pretty good, but again, as everyone has been saying, earnings are being driven essentially by cost savings, not by top-line revenue growth. And there's only so much you can squeeze out of the bottom line. We have a 10% unemployment already. So P ratios, I think that markets are fairly valued right now, in my view. I think there's still opportunities. I don't think it's overly expensive, like some people are saying, but I do think it's a market where you need to be careful. I just don't think you can just throw darts and succeed.
Bring in the Michaels again, and Yoshikami, I'm going to start with you. Gurkha said he thinks he wants to get on the other side of the trade where people are bullish on oil. We do see it down $3.50 today, $82.70 a barrel. Why is that? Because it seems to me if you have a well with 100 million barrels shooting off in the ocean, you have problems in Washington where people are going to start limiting offshore drilling. At least in the long run, you have to think it's going to be more dear. Each barrel of oil should cost more. Well,
here's the problem is all of those are true, but on the other side, you have Europe that has got major problems. And the question really that's happening with traders and investors right now is the economic growth going to continue? If we already have, as I said, these stimulus packages that are going to be expiring, and then we have protests in Greece, and we have all the various other things in Portugal and Spain, and maybe Italy, and maybe Ireland, what's that going to do for European growth? I think those economic headwinds are really trumping what's happening in the Gulf right now.
Let me ask you, because you have to say we don't know what's going to happen in 3 to 4 months when that stimulus goes away. Right. Let's assume that the troubles continue in Greece et al., if you will, and then you've got the stimulus going away. I mean, what kind of situation could we see, Michael, later on this year? I mean, could it be a double dip? Or what?
I don't think we're going to see a double dip. I think the numbers show that the economy is starting to jumpstart. But our view, and it certainly has not been shown in the markets over the course of the last few months, but our view that what's going to play out is it's going to be a slow growth economy. It's going to be a headwind economy. It's going to be a stumbling recovery. We have 10% unemployment. I just don't see how unemployment gets much better than 9% by the end of the year.
Was saying earlier today.
And so if, in fact, speaking of Paul Volcker, we have the restrictions that Volcker's talking about in terms of investment banking activity, I just think there's going to be headwinds. The United States is, I think, well-positioned in the world, maybe not as well-positioned as Asia, but well-positioned in the world relative to Europe to have growth, but I just don't think the growth is going to be as strong as the bulls, the ultra bulls, really are hoping for.
Let me ask you quickly on banks. I mean, you think banks are an opportunity here, but why? Given your economic outlook, it's not super bullish, and given the possibility of regulatory reform really reining in the amount of money these guys can make.
Well, first of all, I think some banks are an opportunity. Citigroup, for example, I think is an opportunity. I think the government, or maybe I should say us, we own 1/3 of Citigroup at this point, and I think they're not going to let them fail.
We as taxpayers, not YCMNet Advisors.
No, you personally, Matt. So the other thing that I think that's going to happen is when regulation comes in, it is going to tighten up the regulations maybe for the Goldman Sachs of the world. But I think one of the things that markets are looking for is they're looking for transparency and a level of trust. I think unless the regulations are draconian, I think what's going to happen is the regulations are going to give investors a sense that they can maybe start believing the numbers. And I think that's what's really important for investors.
Hey, Michael, in terms of earnings, so here's News Corp, but we've been covering a lot of them. I mean, they have been coming in pretty strong here.
But they have been. I mean, this is, let's take this News Corp X Avatar. It might be a different story.
Fair.
And Avatar doesn't come around every single year. But this is an example of a company that has beaten on the top line. But again, I think it's more Avatar-based. I think really, if you look at the EPS number again, you're going to see cost cutting. You're going to see companies getting more efficient.
Companies are still cost cutting in your view.
They are still cost cutting. And the other thing I think it's it's important is you understand that all of these estimates are not driven by some computer model. They're driven by people out there. And people out there, analysts out there, have been burned. And so analysts in many cases, even though there are some analysts that are becoming bulls, many analysts are still pretty cautious in terms of their outlook, and they're waiting for companies to actually prove that they have earnings power. And so I think when you see these beats, in many ways it's just kind of a fearful sort of estimate, and then people kind of take a breath and say, okay, it's safe, I can keep my job and go and raise the estimates to something that I think is actually maybe really is going to happen.
So analysts have a better chance of keeping their jobs if they lowball the estimates?
I think generally speaking, analysts need to be cautious oftentimes, particularly if they've been wrong on the other side. And a lot of analysts, not for their fault, but for whatever on the financial crisis, were dramatically wrong over the last 2 or 3 years. So I think it's just human nature. It's behavioral finance that people are going to be more cautious in terms of raising up the numbers, especially given the uncertainties that we've talked. There's nothing against the analyst community. It's more so, it's just human nature to wait for something to be proven.
Well, let me ask you then, when you see a stock rally because there's a big beat, I mean, is that wrong, that investors shouldn't be reacting that way?
You know, investors.
Maybe wrong's the wrong word.
Let's put it this way: what is really a stock price? Stock price is really its true value plus perception. So if somebody beats, the perception is, well, they beat for what reason? In this case, I was seeing, I think News Corp after hours was up. So I guess investors like that.
Right.
Probably what's going to happen is the dust is going to settle. People are going to say, okay, let's strip out Avatar. What did it really look like? Maybe it was still okay, and we'll just have to see how it calms down. But it's a very emotional game on a short-term basis.